So let's start off by answering the question, what is Forex? So Forex trading is simply the buying and selling of currencies in the Forex market. There's a financial market which is called the Forex market. And this financial market is a place where anyone can go there and buy and sell currencies. And you might be thinking, how do someone buy and sell currencies? Well, as you know, each country's currency have got value against another country's currency, and they form what is called a currency pair. And from that currency pair, we can buy and sell these currencies to make money. So you probably have heard of the stock market before, right? What happens in the stock market? People buy and sell shares at different prices. So let's say you see a company that you like, maybe it can be Facebook or Google. You know that you can buy a Google share on a lower price, and then you can sell it when the price rises, and then you make money. That's the same as Forex. But in Forex, you are trading currencies. You are buying and selling money. So the prices of money is going to go up and down, and you can buy and sell that and make money. So the Forex market is the biggest financial market in the world. So each and every day, there is about $6 trillion being traded in this market. And just because of this market is always moving, and anyone can join this market. Now, let me explain to you how a trader makes money. I will show you how do you join this market and how do you place these trades in this course. But first, let me explain to you how a trader makes money. So there's two ways for a trader to make money. The first way is called buying low. So it's called buy low and sell high. What this means is simply that when you look into the market, for example, so what this simply means is when you look into the market like this one and you realize that the price is at this point right here, and you predict or you think that the market is going to go up, or the prices of this currency pair is going to rise to the upside. Don't worry, we are going to talk about currency pairs in the next lessons. But for now, just think about this. So if you think, if the market is right here and you think that the market is going to go to the upside, in fact, the price of this pair is going to go to the upside. What you do is you buy this currency pair at a lower price, and if the price rises to the upside, you are going to make money. So for example, in this case, I'm going to show you how to use these platforms in the near future, but for now, just focus on the principles of this, and then we are going to talk about how to do all this in the next lessons, right? So let's say you buy right here, and then you expect prices to go to the upside like this, right? So here is where the price is at right now. So the price right now is at 1.0901, right? So let me do this. Okay, so let's say right now as the price is at 1.0901, right? And you decide to buy because you predict that the price is going to go to the upside. And then the prices move, right? So here's what is going to happen, right? So for example, here's what is going to happen. So the price will start to move, and if the prices move to the upside, since you have bought right here and then the prices have now risen to this level here, what you can do is you can now sell this at a higher price. Remember, you bought this at a lower price, and now you can now sell at a higher price. Now, so the higher price that we managed to get right here is what? 1.0915. So this is the higher price. So we buy here. So we buy, and then price move to the upside, and then we sell. So buy low and sell high. And let's see how much money we can make right here. So if you subtract these numbers, you are going to get 0.0014, and these are called 14 pips. we'll talk more about this, but these are called 14 pips. So these 14 pips means it can be $140, it can be $14, and it can also be $1.40, right, depending on the lot sizes that you are using. It can be also more than this, or it can be also in between, but basically when we are using the standard lot or the basic lot sizes that we use in forex trading, this same move that happens in about 30 minutes or 40 minutes, you could have made $140 or $14 or $1.40, depending on how big your trade is. So that's how trading works. You make money when you buy when the price is low, and you sell when the price is high. Which means on the other side, you can start by selling. Let me explain what I mean by this. Let's say right now you are in the market and you are expecting that this price is going to drop, right? If you expect this market to drop, what you do is, instead of buying, now you sell. And why do you sell? You sell because if you sell right here, and if prices drops to the downside, you make money. Think about this. Let's say you are selling anything, or you are in any business. Let's say you are buying and selling shoes, right? If you buy shoes at a lower price and then you sell them at a higher price, you profit. And also, if you manage to get the shoe and then you sell it first at a higher price before paying with the buying price of the shoe. So you start by, so let's say for example, you go to the wholesale and then you take the goods, you don't give the money yet, you go and sell them at a higher price, and then you come back and pay less to the wholesalers, and then you take the money in between. That's the concept of selling in the market. But in this case, you are borrowing money from the broker. You are selling, you are taking the order from the broker, and then you sell it at a higher price. And then when the price drops, you give the broker back their money, and then you take what is in between. That's how it all works out, right? So let's say, for example, you sell right here, and then don't worry about this. This is just an example. We'll explain more. Don't worry about this. What we are seeing here, this is called a visual order. Don't worry about it. We're going to talk about that. But then let's say you sell right here, and then the market started moving to the downside as you predicted, right? So if this happens, right, you could close your trade, and now you sold at a higher price, and now you are going to buy back at a lower price, or you're going to close your trade at a lower price, and you make profits by doing that. And let's calculate how much profit was this going to be, right? So let's say you are going to sell right here. So let's take our drawing pad here. So let's say you were selling at this price right here. So you were selling at 1.0867. So you sold here. So you sell. And if you sell, you want prices to drop to the downside. So if prices drops to the downside, and then you close your trade at 1.0855, right? So this is where you close, right? Or you buy back low, right? And if this happens, that means you profited because you sold at a higher price, and now you're buying back at a lower price. And how much do you make right here? You are going to make, this is going to be 0.00112, right? Correct me if I'm wrong, but you are going to get 12 pips right here. These are called 12 pips. We are going to talk more about those. But in this case, you are going to make $120 or $12 or $1.20, depending on how big is your account, how big is your trade. You could even make 1,200, but this would be a high risk trade. But then this is how traders make profits. So your job as a trader is only one. You need to predict that the market is going to go up or down. And if you think it's going to go up, you buy. And then if it goes up, you sell whilst it is still up. And if you think it's going to go down, you sell, and then you can close the trade or buy back when the market drops in price. That's how you make profit. Which means on the other side, if the market goes against you, you can lose money in this game. So there's a lot of things to learn so that you can do this effectively and you can potentially make money, which is why you need to keep learning. So now let's jump into the next lesson and let's talk about how do you join this Forex market, because some of you might be interested at this point and you want to try it out. So let's jump into the next lesson and talk about how to choose a broker and